X Limited began construction of a new building on 1st January 2007. Question number 18. Is it there? It obtained rupees 1 lakh special loan to finance the construction of the building on 1st January 2007 at an interest rate of 10%. The company's other outstanding two non-specific loan were: one is specific loan for construction of building, and there are two non-specific loan, 5 lakh rupees at 11%, 9 lakh rupees at 13%. The expenditure that were made on the building project were as follows. In January 2007, 2 lakh. April 7, 2 lakh 50,000. July 7, 4 lakh 50,000. And December 1 lakh 20,000. Building was completed on 31st December 2007. Calculate the amount of interest to be capitalized and pass one journal entry for capitalizing the cost and borrowing cost in respect of the building. So what we will do, first we will calculate weighted average borrowing rate for general borrowing. There are two general borrowing, 5 lakh at 11% and 9 lakh at 13%. Because the entire amount is not financed out of special loan. Special loan is how much? Only 1 lakh. But you have incurred more expenditure. So therefore, some portion of it is financed out of general loan also. But general loan are two. So therefore, you have to first find out the weighted average borrowing rate. Write down in the notebook. Step 1. Step 1, weighted average borrowing rate. Weighted average borrowing rate for general borrowing. Weighted average borrowing rate for general borrowing. Right hand side, two columns, calculation column, rupees in lakhs column. First we'll find out how much is the interest. Under that, write down point A, interest on first loan. Interest on first loan, 5 lakh into 11%. 5 lakh into 11% is 55,000. And B, interest on second loan, 9 lakh into 13%, 1 lakh 17,000. Total is 1 lakh 73,000. 72. Okay, 1 lakh 72,000. Weighted borrowing will be total because it is outstanding for full year. Both figures are outstanding for full year. So this 1,72,000 divided by 14 lakh. So point number next, write down D, weighted average borrowing rate. Take 1,73,000 divided by 1,72,000 divided by 14 lakh. How much is that? Is it around 12.29%? Very good. You can write in 2 or 3 digits over here. Then now write down calculation of borrowing cost to be capitalized. See, it's very simple presentation. Calculation of borrowing cost to be capitalized. First write down month, then how much specific borrowing and how much general borrowing. This type of question are quite common in the exam because you don't incur all expenditure at once like we did in the earlier problem. expenditure is incurred in installments, right? And then how to do the calculation. Now, see, in January 2007, how much amount you have incurred? 2 lakh rupees. How much is the specific borrowing? 1 lakh. So, what I'll do first, I will use specific borrowing 1 lakh. Specific borrowing rate is 10%, and the time is 12 months from January to December. Because you've incurred the expenditure in January, means you will take interest for entire year. Out of 2 lakh, 1 lakh is specific borrowing. Remaining 1 lakh is general borrowing. And this is 1 lakh into 12.29% into 12 months divided by 12 months. Is it 12290? Right, 12290. When is the next expenditure incurred? April. Question in front of you. Now I have used entire 1 lakh specific borrowing here. So now whatever expenditure is incurred is out of general borrowing, 2,50,000 into 12.29% into 9 by 12. Why 9 by 12? April to December, 9 months. April to December, 9 months. Because this money was spent in April, so 9 months our funds were invested here. Next is July. July 4,50,000 into 12.29% into July to December 6 months. July, August, September, October, November, December, 6 months. Is it 27,563? Yes. And one more, write down December, only 1 month will take 1,20,000 into 12.29% into 1 by 12. Okay. So how much is that? 1229. So total interest cost to be capitalized will become 10,000 for specific borrowing. 10,000 for specific borrowing, and take this total 64,216 for general borrowing. Is it right? These two total will be 74,216. They have asked you one question also. What is the question? Past journal entry in respect of building. So total amount is 74,216. And the total expenditure incurred on building is 10,20,000. So the entry will be building account debit to bank account. Being amount of cost of building and borrowing cost thereon capitalized. Calculation I have written in bracket. This is one way you can present the answer. Otherwise, you can present in the format given in the question book. Right. One more question will solve from the book only. This time you don't need to write. I allow you not to write. Question number 19. R Limited has borrowed rupees 25 crore from financial institution during the financial year 2001-2. These borrowings are used to invest in shares of A Limited, underline, a subsidiary company which is implementing a new project estimated to cost rupees 50 crore. Very interesting situation. You have invested in share of a subsidiary. Subsidiary will use that money. Subsidiary will use that money for implementing a project. As on 31st March 2002, since the said project was not yet complete, the directors of R Limited resolved to capitalize the interest on borrowing amounting to rupees 3 crore and add it to the cost of the investment. Wow, what an idea. Please comment. Why it is not a qualifying asset? it is investment, and investment is not a qualifying asset, and therefore borrowing cost cannot be capitalized. So the answer is written in your note like this. This cannot be done for two reasons. Investment is not a qualifying asset under IAS 23, and second, only borrowing cost incurred up to the acquisition is allowed to be capitalized, which would always be nil in the case of investment. Okay. Now you come to one question. Search for this question on the screen. Where is this question? AS Limited has purchased during the year a ship on deferred payment basis. Question 12. Payable over next 10 year. The company has computed the interest payable over this 10 year and debited interest suspense account. Very good. Every year 1/10 of the same is written off to P&L account, treating the same as deferred revenue expenditure. Comment. Can it be done? A Limited has purchased during a ship on deferred payment basis. Is a ship in a ready to use condition a qualifying asset? Okay. So if there is no qualifying asset, means whatever borrowing cost you are going to incur will be recognized in the same year in which it is incurred. But what they are doing, they are apportioning it over 10-year period, because the useful life of the ship is 10 year. Can the interest cost be deferred and apportioned over the useful life of the asset? No. So this answer is wrong. They should not have done this. So you will write, as per IS 23, borrowing costs that are directly attributable to ACP, acquisition, construction or production of a qualifying asset, should be capitalized. In the given case, the ship is ready for use, but payment to the supplier is deferred over a period of 10 years. Hence, this interest payable is not eligible for capitalization as borrowing cost, and as per this standard, borrowing cost which is not eligible for capitalization should be charged to profit and loss statement. Hence, the company's policy to defer the same and write off over 10 years is not proper. Okay, this standard is over. Some questions, do it as homework, which we have not yet done.